Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, welcome to the Zacks Top Stock video segment. This is Shiraz Mian. Joining me today will be Nina Mishra. Nina has a technology stock, while I have more on the consumer and retail side. So let me tell you about the stock I have for you today. It's Lululemon Athletica, LULU. The stock doesn't need much introduction. It has been an amazing performer over the last many years. Just in terms of our disclosure, I've had Lulu in the Zacks Focus List portfolio, which is our long-term portfolio within the Zacks Premium product, and couldn't be happier with having held it there. I would not be recommending Lulu if it hadn't had this underperformance lately. So the stock has effectively been moving sideways to down over the last few months since September, I should say. Year to date, it's down about 7-8%, while the market as a whole, as you guys know, is up 8-9%. If you take a longer performance span, though, like a year or 2 years, then obviously Lulu is a much stronger performer. So what's driving this recent underperformance, and why I think you should consider it despite that? So Lulu has been, in simplistic terms, put in that work from home bucket. So the idea has been that this is one of those stocks, the Pelotons and the Zooms and the DocuSigns and many others that have thrived during the pandemic and will struggle in the post-pandemic world. And I strongly feel that that's a wrong narrative. And looking at this stock, which has a multi-year growth trajectory in front of it, the wrong way. So the stock is currently, I want to say, around 320. It was as high as around 400 earlier in that August-September timeframe, and has been drifting down, was down on the recent Q4 earnings release as well, which was at the end of March. The numbers were spectacular, even though the market didn't like management guidance that much, but it beat handily on the top and bottom line. Management has a history of conservatism, and that should be kept in mind while we look at guidance as well. So strong revenue growth, 23-24% for the year as a whole, while the consumer sector, the retail sector was down so much, while many of Lulu's physical stores were down or operating at very low capacity. Sales were up 10%, and a big reason for the growth in sales was the direct-to-consumer business, the digital, the online business, which has been steadily ramped up last year, and in Q4 accounted for 52% of total sales. The Mirror acquisition has been very nicely integrated in the product portfolio and is now an integral core offering with plenty of synergies with the company's traditional apparel-centric merchandise and product portfolio. So, long story short, a very strong secular growth story currently available at a reasonable price point. And if you are one of those investors that have looked at LULU for a long time, but always thought that it has gone away from you, and you have a holding horizon that's beyond the next 9 to 12 months, then I think LULU is a perfect opportunity for you as one of those growth picks in a broader diversified portfolio. Start building positions in the stock. It is at a good position, as I mentioned earlier, around 320. My price outlook is that in a 1 to 2 year time horizon, this stock could be worth $450. Strong growth management puts the growth trajectory on three elements. The most important being digital, that's the direct to consumer. Then there's product. The product mirror comes into that. They plan to have footwear come in. And then there is international. International remains a big expansion and growth opportunity for LULU. Practically all of the 40 to 50 stores they plan to open in 21 will be international, as were most of last year's 30 or so new store additions. So a great store opportunity, an amazing brand, currently potentially being mispriced in the market and giving you an excellent, attractive entry point in the stock. With that, I'll pass it on to Nina Mishra.
Thanks, Shiraz. I like Lululemon, and in fact, I hold a little bit of Lululemon in my personal trading portfolio as well. And my top pick today is Applied Material, ticker symbol AMAT, AMAT, which is the largest semiconductor equipment company by annual revenue. And now we know that chips or semiconductors, they are basically the basic building blocks of computation. So now they have become integral in everything from smartphones to cars, laptops, PCs, video games, and data centers, because our life has become so digital, so digitized, and digitization was accelerated by the pandemic. So we all have heard about this great chip shortage because the health crisis supercharged the need for computing. And because of that, the world is now facing the worst chip shortage in decades. And while the impact appears to be worst for autos, other industries will also be impacted, including smartphones, video game console makers, and many CEOs have already started talking about the impact of supply chain issues, which may cause prices to rise. And chips are not easy to manufacture. And because of this complex manufacturing process, foundries cannot increase production at a short notice, and they require billions of dollars of investment. And therefore, this shortage could last for months. And in fact, according to Bloomberg, while a chip can take at least as long as 3 months to manufacture, the chip making equipment takes a lot longer. So chip equipment makers like AMAT, Applied Materials, are another way to benefit from this chip shortage and this trend of rising need for chips. And another reason why AMAT is important is because just about 12% of chips are manufactured in the US now, down from 37% in 1990. And Taiwanese chipmaker Taiwan Semi, it is the biggest foundry in the world, biggest, most advanced. And President Biden recently signed an executive order which includes a review of supply chains for semiconductors and aims to insulate the US from shortages of chips. In fact, the White House is conducting a chip summit meeting today. That is, they're talking about chip shortage with leading manufacturers and companies. And some industry experts expect funding for domestic chip manufacturing to be included in Biden's infrastructure plan. And overall, the digitization of the economy will continue to fuel strong and sustainable long-term demand for semiconductors. Now let's take a look at some of the charts for applied materials by going to the code page on Zacks.com. So the first chart I wanted to show is the price consensus and EPS surprise chart. You will see that the company has missed only once in the past 5 years. Now looking at the detailed estimates page, you will see that analysts have raised their earnings estimates for the current year and next year. They have gone up significantly since the company reported. And recently, the company held its investor day virtually, and they provided a rather conservative guidance. And because of that, the stock had come down slightly. But analysts, most covering analysts, remain very bullish on the company, and they have raised their price target for the company. Now, this is a Zacks rank number 2 buy ranked stock as of now. It's D for value, which is the case for most technology related stocks because they have gone up so much over the past year or so. In fact, applied material has surged over 150% over the past year. It has an excellent score for growth and momentum, and B for VGM. And as I mentioned, that it has gone up a lot, but this is still trading at a rather reasonable forward valuation of 23 times forward earnings. And if you will see that industry rank is in the top 27% and sector rank is in the sector rank is not so good, but industry rank is very good. And as I mentioned, that they are long-term tailwinds for semiconductor companies and semiconductor equipment makers, and that is why this stock is poised to benefit. And since it has gone up a lot, I think any opportunities to buy on dips should be used by long-term focused investors. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos so that you do not miss anything. And we will see you next week.